So Ibrahim, we've also seen a report which came out a couple of months ago now, the UBS report. It looks like quite scary news at first read.
It is actually. I mean, I was quite shocked looking at that report and at the data, and it seems it's a little overblown out of proportion.
Okay.
Having said that, I mean, looking at the data in 2023 for the UBS, Dubai was sitting at like number 23 down at the bottom with no way of the bubble. And all of a sudden, we're sitting at number 5 with a bubble with Miami, Zurich, and Tokyo. We're not sitting up there where Zurich, Miami, and Tokyo were still up there.
Yeah.
I think there's a lot of factors, and you and me have been talking back and forth about those factors as to what has not contributed to that report, where it would make more sense for people to understand. So you want to put some light on it?
Yeah, so one of the things that you got to consider what's causing that bubble at the moment, and obviously the risk is the oversupply, population growth numbers, everything mixed in together. Now we've seen a steady, 15% population growth for the last 5 years?
Right.
That's where we're at. Now, in terms of supply, we've got a large number of units coming into the market this year, next year, and the year after. But what are these units which are coming into the market? And this is, again, the same conversation that we keep on having. And it seems like, or it certainly looks like, that the supply number in places like JVC, the apartment ranges, which are the smaller apartment sizes, the ones, the twos, you mentioned it earlier as well in studios, all of these seem to be the larger number of units coming into the market and to be subprime areas. 26,000, I think we've got due in the next year or something like that in JVC alone, right? So that's actually causing that bubble factor. But, and there's a big but to this, now Dubai, we find it grew so much in terms of the bubble risk, but there's one thing which Dubai sits right at the bottom of the list for. Can you tell me what that is?
The paying off the property through the rental value.
Correct. So in terms of yields, Dubai's number is still technically the best yielding project or the best yielding city in this entire bubble index.
No, I agree with you. And a couple of other things. I mean, the population growth we talked about, it's still growing. Again, the per capita income. That's another thing that needs to be taken into account because everybody who's investing in Dubai isn't working in Dubai. So you have a lot of international investment coming in from high net worth people, which doesn't get in account for. Now, what you said is in terms of the bubble, yes, we've been saying it also that the bubble would come, but that doesn't mean it's going to wipe off your portfolio or your units. I mean, if you're looking at a property segment of studios or one beds, and you were targeting at a growth rate of 25 or 20%, in two and a half years or so. So now you're looking at maybe 17, 18 or 20%. Now, if you look at the numbers, and we keep going to Property Monitor as a very authentic reporting system on the Dubai market, the monthly growth is over 1.1%.
Yeah.
2024 was close to 12% per annum. And since growing at the same stage, 2025 is no different.
Yeah.
We're sitting exactly at about 11.9, maybe 12% growth. So if you look at the growth numbers, it has defined all pundits and people who've been talking about Dubai real estate. What you said, coming back to that, in Dubai, it takes about 11 years for a property to be paid off through the rentals. If you look at some of the mature markets, North America, Europe, or other places, it takes about 22 years,
Correct.
which is double the cycle.
Exactly.
So I'm not sure, are we sitting at a bubble? I would agree not with that. But I would still say that if we have investors, and we talked about it, and you had a very good advice for those investors.
Yeah, we'll keep on coming back to it, but I'm sure they'll reach out to us as they're always welcome to.
Great.